right, so first we're going to get into the different types of business lending. I want to make sure we're clear on this, just because a lot of times when you go online and you see a lot of people talking about different options where you can get funding for, we want to make sure we have that clarity on what actually will work and what does not work. Okay, so one of the first things that a lot of people do when you're first getting started with the business, or even if you're at that 2-year mark, is they normally want to get like a term loan. Okay. And with the term loans, those can go up to, 1 to 10 years, depending upon where you're at income wise and what type of, loan product it is. But the term loans give you pretty much a large lump sum of cash. You pay a monthly amount back, and you're able to basically allow that to kind of grow. So as you pay that monthly payment back, it helps build up your business credit, and then you're able to flourish. Now, one of the most popular types of term loans is the SBA 7A loan. There's the SBA 504 loan and an SBA Microloan. So we'll start our way from the bottom and kind of work our way up. So the microloan is pretty simple. Once you have everything established in terms of your personal credit, you're able to actually get the microloans pretty simply, just because they go up to about $50K. They don't require a ton of financials for you to have, so you don't have to have like 10 years of taxes or some crazy, request like that. You're able to kind of be in that situation where you're not making a ton of money, but making some money, and have a good idea, a good project that you want to do, and you're able to qualify. And a lot of this is credit based. Ideally, you do want to be in that 700 club and higher. I know some people will try to say 680, but just from experience, if you have a 700 or higher and you have a file that is actually strong, meaning that you have at least 6, 7, 8 accounts on your credit report that are strong and positive, that will definitely increase your chances of getting approved for the microloans. Now, that does not mean that they will just give it to anybody. You want to make sure that you have a plan on what you want to do business-wise, and also go through the process of really understanding your industry, okay? Because when you're working with the bankers, like we connect you with bankers on a regular basis, so we don't just do the regular process of sending you to a bank blindly or having people apply online in our company. We actually connect you directly with either the presidents, vice presidents, or senior business bankers at the particular banks that we work with here at Emerson Capital. And then when we go through that process, they're able to do a thorough evaluation of what you have as a business. So with that being said, we want to make sure that you come correct and have the right financials and all that to go along the process. Now, the next step in that process is the SBA 7A loan. That SBA 7A loan is a really, really good product because it goes up to $5 million. You can use it for a myriad of different things, whether you want to buy a business, which is what I do recommend, and we also assist with that process, or if you just need funds for the business. However, the catch, the SBA 7A loan does typically take longer to get approved for. Okay, so you're looking at the fastest 30 days, normally it can go up to 3 to 6 months sometimes. Now, the benefit of it is that the interest rates are going to be lower, similar to the microloans, also good interest rates on that as well. And when you have the SBA 7A, that loan basically puts you in position so that you're not paying really hardly any interest. You may be paying between, I think at the right now, the Fed rate is at like 7.5%. So it's not a bad deal in terms of interest rates. And it allows you to kind of grow, be flexible, and give you just a solid time frame, because the time frame for paybacks can be 10 years, sometimes even longer, depending upon the deal you have, especially if there's mortgage or real estate involved. But when you have that 10-year term, your interest rate's pretty low, so you're not spending a lot of money on that. So that's typically the holy grail when it comes to business lending. So pretty much everybody wants the SBA 7A. Now, going back to more of the catch is that you're in a situation where it may take some time to get approved, but also you do have to have quite a bit of financials. Now, when you get those financials, they have a situation where you need to have like profit and loss, balance sheets. They may ask for your personal financial statement. So when it comes to that process of the personal financial statement, it goes through all of your finances, make sure that you explain everything, the debts you have, assets you have, whether that be property, whether that be like life insurance or other particular assets that you may have, as well as your business itself. So in that situation, you want to make sure that you kind of fill that out correctly, which will, again, we assist you with this whole process. All right. But the other part of that is when you have the right financials, they'll also ask for like a business debt schedule. So if you have previous business debt, they may ask you, hey, you need to go through and fill all this out. Give us every piece of information needed about your business debt, whether it be previous or current business credit cards, business lines of credit, other business loans, things such as that. Any defaults can definitely hurt. So that's something that we'll have to work with you and get that cleared up if needed. But those things are definitely asked upon, especially if you're getting more than 100,000. Okay, so you're trying to get a large amount of money. You want to make sure you have the right financials. And again, we'll work with you to kind of make sure all of that works and makes sense. It is 100% verifiable, but you want to make sure you have all that together. And the other part of that is they will ask for 2 to 3 years of business and personal tax returns. Sometimes you may get a place, certain banks we work with will ask for just 1 year, but a lot of them do want you to have more years of history. Okay. And that applies to the SBA 7A loan, but also even for the real estate side, when you get into the SBA 504 loan. Okay. So that particular loan allows you to get access to real estate. So you can buy a property or heavy equipment. Like if you need to buy a crane or something large like that, you can use it for that purpose. Now, pretty much the same time frames, same rates for the most part. It's not too crazy on that part, but it's just really the purpose of what you use it for. Now, a lot of times the time frame though, of how long you can have that loan can be a lot longer. So that's why a lot of people do like that, especially for those of you who are in the real estate space, business development, that whole world, definitely good for you in that capacity. And one of the questions that a lot of people wonder is like, can we really get one of those when so many people are already applying? And you definitely can. It really comes down to who you're working with. And that's why I said on our part, we have a strong connection with a lot of the top bankers. So when we go through our process, it's a lot different than when you go through it alone, walking into the bank blindly with no credibility, recommendations, just your credit file and income. Okay. So when it comes down to it, those are the primary term loans that you're looking at. And when we get those term loans, they can definitely help you out. Now, one of the issues though that comes with getting the term loans is that you automatically have to start making payments right away. Okay. So versus some other business products you can get, those particular loan products that you do have to start making payments. Now, it may not be a high payment amount, but it is something that you have to consider, especially if you're like doing real estate and you have a project that's not going to pay you money for a long period of time. So typically you want to make sure you get a loan that's large enough to cover you for at least that first, 4 or 5, whatever amount of years you need to kind of get things going. All right. So what that means is also, let's say if we got you, you need to get 100,000, but in reality, 1 month's of payments or 1 year of payments may cost you, 15,000. Okay. That's a situation where you want to make sure that on your end, you budget a year. So when you get your loan, you put aside a year worth of payments in that bank account. So that way it gives you the time to maneuver and do what you need to do. So those are just some of the initial things we'll talk about. And again, as we go through the podcast, we're going to give you so much more in-depth information about this process, especially we're having you hear from our bankers directly. So that way you can see that, everything that we say is backed up by actual real people in the space. And then we'll go ahead and just build from there.